Welcome students. Today we are going to next chapter money market and capital market in India. Introduction. Finance is the backbone of an economy. Finance basically refers to the management of money. It includes funds needed by individuals, business houses and the government for various purposes. Thus the finance is categorized as personal finance, corporate finance and public finance. The financial system of the country is responsible for the mobilization and allocation of funds. It helps in creation of wealth which is vital for the economic development of the country. The financial system in India comprises two financial institutions, financial market, financial instrument and financial service. This chapter deals exclusively with financial market in India. Financial market are an important component of the financial system. So student, we see meaning of financial market. See, financial market refers to a market where sales and purchase for financial assets such as bonds, stocks, derivatives, government securities, foreign currency, etc. is undertaken. Financial market operate through banks, non-banking financial institutes, broker, mutual funds, discount houses, etc. Financial market includes distinct market, that means the money market and capital market. So student, we see money market in India. Meaning, money market is a market for lending and borrowing of short-term funds. It is a market for near money. That means short-term instruments such as trade bills, government securities, promissory notes, etc. Such instruments are highly liquid, less risky and easily marketable with a maturity period of 1 year or less than 1 year. This is a money market in India. So students, we see structure of money market in India. The money market in India is dichotomous by nature. It comprises of both the organized sector as well as the unorganized sector. The organized sector includes the Reserve Bank of India, that means RBI, commercial banks, cooperative banks, development financial institutions, investment institutions, and the Discount and Finance House of India, that means DFHI. The unorganized sector, on the other hand, comprises of indigenous bankers, money lenders, and unregulated non-bank financial intermediaries. Money market centers in India are located at Mumbai, Delhi, and Kolkata. However, Mumbai is the only active money market center in India with money flowing in from all parts of the country. The following chart explains the structure of money market in India. See students, in this sector we see organized sector, RBI, commercial bank, cooperative banks, development financial institutions, discount and finance house of India. These are organized sectors, and unorganized sector is indigenous bankers, money lenders, unregulated non-banks financial intermediaries. So students, we see organized sector. The organized sector of the money market consists of the Reserve Bank of India, commercial banks, cooperative banks, regulated financial intermediaries, etc. Let us now discuss the organized sector on the money market in India. See, Reserve Bank of India, that means RBI. Every country in the world has a central bank which has at the apex of the banking system. It is entrusted with the responsibility of regulating the money market in the country. Reserve Bank of India is the central bank of our country. RBI was set up on the basis of the recommendations of the Hilton Young Commission. RBI Act of 1934 provides the statutory basis of the function of the bank. RBI commanded its operations on 1st April 1935 as a private shareholders bank. RBI was nationalized on 1st January 1949. It is the most important constituent of the market money. So students, we see some definition of central bank. First definition, Dr. M.H. de Kock. Central bank is one which constitute of effects of the monetary and banking structure of the country. And Professor W. A. Shaw, central bank is the bank which control credit. So students, we see function of Reserve Bank of India. First function is the issue of currency note. RBI has the sole right to issue currency notes of all denominations except 1 rupees note and coins. As per minimum reserve system of 1957, RBI is required to maintain minimum gold and foreign exchange reserve of rupees 200 crores, out of which at least rupees 115 crores should be in gold and the remaining rupees 85 crores should be in terms of foreign currency and government securities. Bankers to the government. RBI act as a banker's agent and advisor to the government. It transacts the business of both the central bank and state governments. It expects money as well as make payments of behalf these governments. It also undertakes the management of public debt. It advises the government on a wide range of economic issues. Then third function is bankers bank. RBI exercises statutory control over the commercial bank. All scheduled banks are compulsory required to maintain a certain minimum of cash reserve with the RBI against their demand and time liabilities. RBI provides financial assistance to bank in the form of discounting of eligible bills. Loans and advance are also provided against approved securities. Next function is custodian of foreign exchange reserve. RBI act as a custodian of countries of foreign exchange reserve. It has to maintain the official rate of exchange of rupees as well as ensure its stability. RBI also undertakes to buy and sell the currencies of all the members of the International Money Fund, that means IMF. Next function is a controller of credit. As the supreme banking authority of the country, RBI has the power to influence the value of credit created by commercial banks. It also monitors the purpose or use of credit. Quantitative methods such as bank rate, open market operations, variable reserve operations, variable reserve ratio such as cash reserve ratio, that means CRI, statutory liquid ratio, that means SLR, etc., control the volume of credit created. Qualitative methods such as fixing margin requirements, credit rationing, moral suasions, etc., regulate the purpose or use of credit. Next one, collection and publication of data. RBI collect the complies statistical information related to banking and other financial sector of the economy. Next one, promotional and developmental function. RBI also perform certain promotional and developmental functions such as extending banking service to semi-urban and rural areas, providing securities to depositors, development of specialized institution for agriculture credit, industrial finance, etc. And last one, other function is RBI act as a clearing house of settling the account between its member banks. As a leader of last resort, it also provides liquidity to banks experiencing financial difficulties. Okay, students, thank you.